It's been the story that we've seen since the beginning of January. Markets quite quiet at this point, given the fact that most are expecting those earnings to filter through. Can we expect more activity when those earnings come to the fore? And it also seems that foreigners are still very much in play despite the low activity so far.
Good morning. Yes, I think we're going to see some form of recovery. The market has actually shed about 3 to 5% of the activity it had earlier on in November up to December. And we've had a lot of things that have been mitigating factors for the stock market, one being political risk, the other being generally the economy has suffered an inflation increase, and we also have the issue of regional unrest, but I don't think that has really affected the market. But looking on, we also have a series of corporate actions ahead. This may drive demand for the counters, especially the commercial banks, which are set to release their end-year results for 2010.
Well, Robert, also just touching on that 30-year bond, a lot of talk around it, the Savings Development Bond, aiming to support the build-up of national savings. It has been on the top of the agenda. We're looking at a yield of around 12%. You're talking about the inflation rate coming through far higher than most had expected, breaching the target band, and also keeping in mind this is hot on the heels of an interest rate cut in Kenya. How is all of this going to affect the savings scenario, and given the fact that the central bank and government has come up with a solution?
I think it may prove to be a good thing eventually, and looking also at the point we are, the weak shilling, we've also had the demand for credit is still quite high. And also, if you look at the GNP of the country, we still have a lot to do, because we have imports almost 3 times greater than the exports. And I think having this may shift back a lot of credit to the local people. So looking on at a yield rate of, I think, 12%, that should be okay. And I think I'm optimistic about the uptake.
Let's touch on KenolKobil. It has been one of the favorites for some time when it comes to the investor community, and it keeps expanding its assets. It's now got their eye on Burundi, and we saw the acquisition of a sizable depot in Bujumbura in Burundi. Is this going to prompt more investors to head into the stock, or do you think they're going to wait to see the effects of this acquisition first?
I believe the effects of this may be more of a long-term thing. Maybe we are talking about at least 8 months to 1 year. They acquired Phoenix Petroleum of Uganda. I think that is a good thing. We look at Uganda as being a potential hub for the oil industry. Recently discovered oil in the Entebbe region. So I think it's a good move. And looking at KenolKobil has also been quite strong with its revenues. The last financial report was quite good and promising. Looking at the stock itself at 9 shillings, it's quite affordable, a good entry point. Has been trading about 6 months ex-split, and I think there's a lot of room for growth. We could see anything between 10 and 15% in the first half of this year.
Let's touch on another energy company. We're looking at Kenyan, also gaining ground yesterday, up 0.3%, announcing that it's setting up a coal plant near the Mombasa cement factory. You know, all these companies doing quite well. We're looking at stronger balance sheets, and this is what's also prompting them to expand further.
Yes, and I think that's a good move by Kenyan. They are investing in an alternative form of power generation, especially at a time when we have the cost of fuel being quite expensive. I think going into using coal as an alternative may prove cheaper, though they may have to be import this, but I think it's a good move. I think the returns are great, and looking at also the location of the plant they have acquired, we find it next to one of the major cementers who rely again heavily on power for production. So I think it's a really viable project.
Robert, let's touch on the telecoms industry, and whenever we talk to you, clearly it is something that is definitely on the top of the agenda. We're waiting to see a significant turnaround for Safaricom, and perhaps Bharti and Zain going from strength to strength because they have dropped tariffs so significantly. It's not sustainable though. But the most recent news out of Bharti Airtel, they are planning to create tower companies in each of the 16 African countries in which they operate. So clearly diversifying further and making sure that they are getting the most out of their investments in each of these countries.
And I think it's a good move. I may play the devil's advocate here for Bharti, but I think what they're doing is very practical, business-wise. They're focusing on market share rather than revenues, and I think they have a model which was quite successful in India called the Minute Factory. And also looking at the times we are in right now, we are moving away from voice. Data seems to be the new frontier. The regional acquisitions seem to be underway, and I think the returns on this will be good. They have already eaten 4% into Safaricom's market share. That should be about 500,000 subscribers. And I think this competition is healthy, and I think it will also ease inflation to some extent, because what people would otherwise use for these services would be used on other services like food. So I believe looking at both sides of the coin, it is a better thing.